Stocks swing between gains and losses with advances and declines nearly balanced. Automobiles and metals are the big drags, even as energy and utilities eke out gains.
Reliance Industries pips analyst estimates despite global pressure in the O2C segment on the back of strong growth in digital and upstream oil verticals. Importantly, the first gigafactory for solar PV modules is expected to go on stream later this year. Analysts stay upbeat on the stock.
An Indian Mobile Congress and WTSA Reliance Jio chairman Akash Ambani proposes updating the data center policy to protect Indian data and to offer incentives on power consumption. Bharti Group chairman Sunil Mittal bats for a level playing field with foreign satellite players, while AV Birla Group chairman Kumar Mangalam Birla calls for government support to Voda Idea to realize India's digital future.
Hyundai Motor India raises 8,300 crore rupees from a rush of 225 anchor investors, both foreign and domestic, ahead of its offer to the public that opens today. The company tells CNBC-TV18 it expects to grow volumes, market share and profitability with big capex ahead and an EV push with an electric Creta set for a launch later this fiscal.
Crude slides after OPEC cuts its world demand estimate for the third month in a row as a lack of stimulus continues to dent Chinese imports, and indications that Israel may target only Iran's military targets eases supply fears.
Good afternoon. You're watching Halftime Report here on CNBC TV18. I'm Hormuz Patakia. Ekta Batra is with me. Ekta, good afternoon. It's a very important day for the markets, right? With the weekly expiry for the financial services and a lot of other things to watch out for as well.
Hi, Hormuz. Well, it is going to be important every day, considering that we're going to have a barrage of earnings to reckon with. But definitely a day of profit booking, you'd have to say at this point in time. But we do have a lot of stocks in focus, and that continues to be the dominant theme. So we have Reliance and HCL Tech, which are reacting to numbers. We have the Hyundai Motor IPO, the big bang IPO, the largest IPO till date in India, which opens today for subscription. So that continues to make headlines. Separately, we do have a lot of results today as well to watch out for. So HDFC Life, HDFC AMC, KEI Industries, PVR Inox. So a lot of interesting numbers and results tomorrow. Do watch out for Bajaj Auto because it's sulking ahead of its numbers tomorrow. We do have L&T Tech Services, Emphasis, South Indian Bank, all of these companies to watch out for in terms of trade and in terms of the next couple of days.
You know, we've been highlighting this since the morning, Ekta, that the problem with both the Nifty and the Nifty Bank has been that after one good session, you don't get to see follow-up buying, and that's what you're seeing on the Nifty today as well. We opened higher, but we've not managed to sustain those gains. But the Nifty Bank is trying to change that trend. It's still trying to, it's in the green now, above levels of 51,800. That is the very important level that it needs to close above. It has not closed above these levels since the 3rd of October. And the Nifty, though, has not had 2 successive days of gains since the 25th of September. So that is something that you need to watch out for, whether they manage to change this by the close of the trading session. Is the financial services expiry today, so that is something that will keep the Nifty Bank in focus as well. What is not doing very well is auto, as Ekta just mentioned. Bajaj Auto is sulking ahead of results. Metals are not doing very well, and IT is a pain point in today's session as well. But the one stock that is not having a pain or any sort of pain in today's session is Angel One, and that is up over 13% on the back of its quarterly numbers. Vamakshi is here with the details and why the stock is up over 13% today. Vamakshi.
Well, thanks so much for that. It's a strong show coming in from Angel One. Revenue seeing an uptick of 8% sequentially. EBITDA margin seeing a very sharp improvement of 1,089 basis points. In fact, EBITDA margin now stands at 44.4% for the company, and this is largely being driven by an improvement in the cost to income ratio. Net profit too has surged higher by almost 45% sequentially. Largely, the growth in revenue is being driven by the interest income, which saw an uptick of almost 22%. Cross broking revenue, however, was rather muted at 2% sequentially. Overall, when we look at the improvement in the operational performance, that is being driven by a couple of factors. The first one being that in the first quarter, other expenses included IPL related costs of 114 odd crores, which is not present in Q2. The second factor is that fee and commission expenses were flat sequentially. However, all of this is being partly offset by a pickup in employee costs, which have seen a surge of 15%, mainly on account of onboarding in various roles. Operational metrics for the company also look quite healthy. Keep in mind that they were already disclosed by Angel One in their business update. Gross client acquisition was up nearly 16%. They also saw an improvement in their share in India's demat account, which improved by 44 basis points. Average daily turnover was also up nearly 4%, and overall they also mentioned that their market share in both the equity as well as the F&O segment specifically had seen a bit of an improvement. Overall, when we look at the numbers, it's a slight miss on revenues, but the operational performance more than makes up for it. Company says that this is the best ever financial performance that they have posted. Resultantly, the stock is surging higher today.
Okay, all right, Makshi, thanks very much for that. Angel One is up around 13%. But do keep your eye out on Ajmera Realty. That stock has shown a huge amount of surge in terms of price as well as volumes today. So it's up around 19% for this real estate company, which has gained around 80% in terms of market cap this year. Remember that they did come out with their operational update a couple of days ago and have indicated that their collections were up around 20% for the quarter. And one of their projects in Bhandup has cumulatively sold 49% of its inventory. So previously, they've come out with important and positive updates. The stock, as you can see, is at the high point of the day. But talking about real estate, we have Sunteck Realty also, which is buzzing on the back of a good business update. Sonal is here with the details.
Well, yes, the stock is higher in trade, and remember, it's a good recovery that the company has seen this time around. At a time when YOY sales have declined for other players, Sunteck Realty has gone ahead and seen an improvement. So to take you through the numbers, Q2 pre-sales, they're up 32.7% to come in at 524 crore rupees, and collections are higher by 24.8% to come in at 267 crore rupees. Not only that, even their first half numbers look good. The collections are up 21% at 609 crore rupees, and sales are up 31% at 1026 crore rupees. As I said, there have been many quarters of disappointment for Sunteck Realty, but finally most of these launches, they are converting into sales, and that is what the street seems to like. This is the second consecutive quarter of growth in sales for them, and that is something that the street is liking.
Indeed, Sonal, thanks a lot for that update. 7% higher is Sunteck Realty on the back of that business update. And since Ekta was mentioning Ajmera Realty, the stock is up in 5 out of the last 6 trading sessions, Ekta. And since the 7th of October, the stock is up 30%. This is the kind of moves that you've seen. 800 now on Ajmera Realty over.
And 52-week low is around 340 odd rupees, 343 odd rupees.
So it's double from the 52-week. No, there's a very, very sharp up move there from Ajmera Realty. But the other stock on our focus today is HDFC Life, and that is going to be reporting its results today. Yash is here with the key expectations. Yash.
Well, Hormaz, as you correctly pointed out, of course, HDFC Life reports its second quarter numbers today. The quarter is expected to be strong for the life insurance company, but all eyes importantly would be on the kind of margins that they're able to derive from the strong top line. In terms of expectations, as per CNBC-TV18 poll, the new business premium for HDFC Life, that is expected to grow by about 15%, expected to come in at about 8167 crore rupees. The total annualized premium equivalent, or APE, that is expected to grow by 24% at about 3,775 crore rupees. Retail annualized premium equivalent expected to grow by 29% at about 3,336 crore rupees. Two important aspects: value of new business, that is also expected to see a strong growth of 20%, and margins, they are expected to come lower by about 94 basis points at about 25.37%. This is largely the expectation that we've been building up. What has the company guided for as far as FY25 is concerned? 15% growth in total APE and retail APE, 17 to 18% growth in VNB, and 26% margin plus minus 100 basis points. This is the company's guidance. And if the numbers in the second quarter do come through as what is being anticipated or estimated for the company, then at least for the first half year, they will be well ahead of their guidance, what they've given for the full financial year, FY25. Importantly, the third quarter will be important because that's when we'll start seeing the impact of higher surrender value regulations coming on the margins. But so far, if the numbers come through, then of course ahead of the guidance put through by the company. What has the stock done? In the last 3 months, it's up 16%, 6 months up 20%, last 12 months up 17%. The company trading at a valuation of 2.4 times price to embedded value.
Okay, all right. Thanks very much for that. So that's HDFC Life, the Q2 FY25 numbers expected today. Well, since we are talking about stocks which have done well, just want to point out Walmart, which is up around 3.8% today. It's rallied around 9% this week. And, it's had a phenomenal year with a gain of around 155%. So continuous gains which have come in after the company has indicated that, it's got a positive response from the Indian regulator on one of its molecules. So it seems as though that success in their molecule franchise is probably aiding the stock. As you can see, the stock up around 3.7%. We'll take a short break. More on the markets once we're back. Stay tuned. Welcome back. We're just about lower for the Nifty by around 60 odd points. We have the Bank Nifty, which has picked up a little bit of pace, so up around 45 odd points, but really flitting between red and green today. The advance decline ratio currently holding marginally on the advancing side, so let's see whether that manages to sustain. So just about 1:1 is currently where the advance decline ratio stands. Overall, you'd have to say it's a quiet day of trade today, and specific stocks or stock-specific action continues to be the theme in today's trading session. But let's concentrate on some opinion then. Madison Group's co-founder and chairman, Vivek Chandra Sehgal, tells CNBC-TV18 that the company's focus remains on quality and cost across the board. Our colleague Danish Anand caught up with Mr. Sehgal and discussed with him the company's business outlook and innovation plans. Listen in.
It's got to be a team effort. The whole team then starts to work on that. So we believe that in all our plants all over the world, we focus on quality, cost, delivery, management, goes on.
Right. And so how do you plan to integrate AI more into your everyday activities that are taking place in your factories?
That's for the IT team and the company that we have to ensure that that happens. Because whatever is going to help the whole team is going to be good for the company. So definitely they'll keep doing it. But I'm not an IT guy.
Right. So if we talk about the overall business now, what sort of current demand that you're seeing and what is your outlook for the remaining financial year?
So I can't give company this thing just now. But all I can say is the numbers are up and down, doesn't matter. It shows that there's life in the business. So if a particular thing has gone up, has gone down, we don't worry about it too much. But in the end, there is a huge demand for mobility, and I think that's what really counts.
Okay. And sir, as far as your capex is concerned, as far as current financial is concerned, are you on target? And how do you plan to use the entire capex that you've lined up?
I can't offer. I'm in quiet period, so my results are going to come. So I'm in a quiet period. I can't comment on anything like that.
Right. So very lastly, we are seeing that EVs in the country, they're picking up, and we are seeing that EVs are all across all segments. So what sort of expectation do you have from this vertical for your company?
I think whatever the customer wants, we will enable that. We will supply everything what my customer wants. So it's a thing in work in progress. I don't think you can cut off just now and say, oh, how's the future here? No, I think we have to be patient and let it come out in the right sense of it, and that would be the right thing.
Vivek Chandra Sehgal in conversation with CNBC TV18. Time for a short break. Sachitanand Uttekar of Trade Bulls joins us on the other side for a quick chart check on the market. Stay tuned, we'll be right back. Welcome back. Pull up the Nifty Bank, and that is seeing some very choppy moves. We had seen the Nifty Bank at the start of the show at the high point of the day. It has now given up most of those gains, has the Nifty Bank. It briefly had touched the levels of 52,000 in intraday trade, and it's now back to those levels of 51,850. Good time to get in. Sachitanand Uttekar of Trade Bulls for a quick chart check as well. Sachitanand, the Nifty, firstly, good afternoon. But the Nifty being where it is, the question I wanted to ask you is on the Nifty Bank. How important is that 51,800 level for the index to sustain? And if it does so, what kind of upside does it open up for the index?
Good afternoon, Hormoz. Clearly, if you look at both the indices, they are consolidating near their 50-day exponential moving average support. Now, when we look at Nifty Bank itself, the level is placed somewhere close to around 51,760. And for the last 3 trading sessions, we have already seen it comfortably trending near the same. But if you look at the RSI, especially the daily RSI, it has moved quickly towards that 50 mark. And probably this is an early indication that there is a very strong trend momentum which can be developed. If you look at the options data as well, the critical barrier at 52,000 needs to be violated, and once we see a breakout about the same, we may see a very strong directional move towards 52,800 kind of a level. So I think rather than Nifty, I think which is consolidating right now, Nifty Bank is currently presenting a fresh opportunity to build some long positions here. The base is very well set at 51,700, so probably one can keep a stop loss at 51,660 on a closing basis and create some long positions with an intention that 52,000 would be breached during this particular week, and we may see a rally towards 52,840. Now, if you look at Nifty, I think the range of consolidation may continue. There are multiple resistance levels right up to 25,250. But on the lower side, the base at 25,000 looks firm. So probably we may see, Nifty oscillating within this particular range of 250 points. But when it comes to Nifty Bank, we may see a strong directional rally on the upside.
Okay. What about specific stocks? What would you look at?
Good afternoon, Ekta. Clearly, the trends support for Nifty Bank is seen in stocks like Kotak Mahindra Bank, and last week we saw during the week we saw HDFC Bank also performing well. Now it's time for ICICI Bank on the weekly scale. We are seeing a piercing line formation. The stock has also made a strong base near its 50-day exponential moving average support, and we have signs of short covering here. So we are anticipating that this move may unfold and push the stock towards 1285, and that's why we are recommending building long positions here in ICICI Bank futures. The stop loss for the trade should be placed at around 1240. In a day or so, we may see a swing towards 1285. The other stock on our radar has been HAL. Now, the stock was consistently under pressure, but if you look at last few weeks, it has managed to form a base here. It has started trending above its 5 and 20 exponential moving averages. The 50 average is also placed nearby. So the moment we see HAL, performing or sustaining above that 4600 mark, we may see a very strong rally towards the 5,000 levels, and that's why we are recommending building fresh long positions in HAL. One can keep a stop loss at 4510 on a closing basis and expect a move towards 4980 in a day or so.
HAL, interesting pick there from Sachit Anand. Thank you so much for joining in and sharing with us your views on the index and on specific stocks as well. That he expects the Nifty to remain in this 250-point range, but he says the Nifty Bank could be the index to watch out for. But while the Nifty continues to consolidate, Nigel is joining in with how the setups are looking like on the FNO side of things. Nigel, good afternoon.
Well, good afternoon. The PCR is back down to around 0.9. Yesterday it had gone to around 0.8. It's back down to it. It had gone to around 0.9. So that's telling you that the call writing is back in the system, which indicates that the bears believe that they can defend higher levels. So you look at the 25,000 call, that's seeing a fair bit of open interest build up. Even the 25,100 and the 25,200 call. In fact, between these strikes, it's added more than 1 crore shares. So the bears, they believe that they can defend the recent high, which comes in at around 25,250. The reference points you're looking at on the downside, though, that's going to be important. For the Nifty, the 25,000 mark becomes important, 24,950 to around 25,000. While on the Nifty Bank, the 51,500, there was a bit of a meal that was made before crossing this, because last few sessions in the last 1 week or so, numerous times we went to this level, but we couldn't close above this level. Now, in today's trade, the Nifty Bank is still doing a relative outperformance because yesterday we saw a bit of a short covering bounce that did play out. So the reference point on the downside becomes at 51,500 odd mark. Individual stocks that we're looking at, well, HCL Tech, no worries with those numbers, but the open interest built up was phenomenal. And because of that, now we're seeing some unwinding of long positions on that counter. So big unwinding is what we're seeing on that one. On Reliance Industries, I want to make this quick point out here. The total open interest, that you're seeing on Reliance Industries, well, it's around 7.2 crore. In the past, if you look at an average, it's always around 5 crore or less than that. So there appears there's a big amount of open interest built up on this one. So, the swing from here can be quite wild as well. It needs to hold on to these levels of around that 2,600 odd. But otherwise, the open interest build-up is nearly 50% higher than what we see on an average. So this is going to be the big mover, I think, in the coming few sessions. And finally, Deepak Nitrite, the stock is suddenly holding strong. It's up close to around 2.5% the last time I checked. But just take a look at the open interest build-up. Massive build-up is what we're seeing, 10% open interest build-up out there. So fresh longs being seen out there. But just keep an eye out on Reliance Industries. The stock is underperformed. There's a huge amount of open interest build-up at more than 7 crore shares. That one is calling for attention on the F&O side. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's what's taking place in the entire F&O space. Just want to point out that a couple of other stocks such as IIFL Securities and 361 WAM are also doing well today. And in fact, they've had a reasonable month, better for IIFL Securities, which has rallied around 20% this month. 361 is up around 7-odd%. But both those stocks have gained around 5% in today's trading session. So doing well for both those counters. We'll take a short break, but a lot more action on the other side. Stay tuned. Welcome back. Well, let's get some perspective now. US-based pharma company Amneal Pharma has announced investments worth around 1,600 crores into greenfield manufacturing facilities in India, in Ahmedabad specifically, to make GLP-1 drugs. Well, I did catch up with Chirag Patel, who's the co-founder and co-CEO of Amneal, to know more about this development and their opinion on other issues as well.
This is part of our innovations that we like to bring these obesity and metabolic disease drugs earlier in the market than the typical generics, which could be 2030, 31, 32. And as you know, these drugs are expected to have huge demand. It's already having a huge demand, about $100 billion market in the United States. By 2032, 33, globally could be $200 billion market. So we are so excited to bring this collaboration with Metsera. This is a biotech startup company, and bring these medicines to India as well as the rest of the world, including it's a global deal. And we would be manufacturing in India for the world. We have been manufacturing products since 2008 in India and keep expanding our India presence since then. So we have invested over $600 million. We announced a new investment of $150 to $200 million into the next generation technologies. So innovative manufacturing, innovative R&D, and we also are marketing products now in India, started about 18 months ago in various categories, and we'll keep expanding with unmet needs, specialty products, and we're committed to the Indian market for a long time.
Well, time for a short break now on Halftime Report. More on the markets and specific stocks on the other side. Stay tuned, we'll be right back.
Welcome back. Well, let's discuss one particular topic which is making headlines. Reports say that hospitals are introducing charges from disinfection fees to peak charges for operation theatre time, etc. So basically, the reports also indicate that insurers, once able to offer comprehensive packages and predictable costs, are now facing unbundling of services. So what is taking place, Hormuz, is that there are charges which are being unbundled in hospitals. First, they used to be a part of the care or the room charges, are now being separated out and charged separately, so that the cost of the bill goes up. To get more perspective on it and how exactly surge pricing is taking place, for example, if you need the operation theatre at a certain time, then maybe there could be an additional charge for it, etc. To talk more about it, we have with us Ajay Kumar, Dr. Ajay Kumar, who's the Executive Chairman, Healthcare Global, on the line to discuss this. Dr. Kumar, thank you very much for taking the time out and speaking with us. We understand that you are traveling. This particular piece of news is really making headlines now, because there is fear that hospitals are probably unbundling their charges. They're looking at surge pricing in some form or manner and separating a lot of their costs. Is that actually taking place? What's the on-ground situation?
Yeah, the on-ground situation is most of the patients are aware what are the charges are going to be when they enter the hospital. And I believe in complete transparency. I think the patient and care provider should be provided the actual charges. It may be for plus or minus 5% at the time of discharge. This should be audited by all the hospitals to make sure there is absolute transparency in the system. Yes, there are reports of hospitals doing this, and there are reports they're doing to cover some additional charges or HR charges and all. But whatever it is, I think in my view, what we do at HCG is it should be clearly stated to the patient. Before they agree for a procedure, it is of paramount importance that the patient know what are the actual charges be. Obviously, the patients have a choice. They can make the final choice. And also, I believe, in my view, while there is a lot of thing about who is running the hospital, the private equities and all of that, the doctor-patient relationship is important. As a doctor and a promoter, I can say one thing very boldly. The doctor's involvement in deciding what should be the charges, fees is also important. And that is why sometimes I believe doctor administrators are good, because we take a lot of this into consideration. While in private equity, there is a theory that doctors should be medical ed, there should be separate CEO, but there is also a merit for saying, can a doctor be a CEO? Because I think we understand what is the procedure, what should be the charges, and why we are charging, if there is any extra. So in my view, ethics, transparency is important. And that is why I always say margins are important. When you look at margins, if somebody is having 20, low 20, yeah.
I just wanted to get an idea in terms of whether this is actually happening on the ground. This surge pricing that, you know, for example, an OP is charged at a premium time differently. And angioplasty, if in case somebody needs a stent, then it's an additional charge. Earlier, it used to be a package which patient used to get. So, is this happening on the ground? Because the larger hospitals that I spoke to said that it's not taking place.
It is not. Best of my knowledge, it is not happening routinely. It is not. There may be some hospital isolated incidences, but I can tell you one thing. Like Harvard report came, Harvard Business School. Indian customers are very smart. They see in between the lines. If there is anything like that, I'm sure they will detect. But I think, best of my knowledge, it is not happening. But I think we should also create public awareness. So if it is happening, they should bring it to light. Today, there is social media. There is so many things. It should be brought to light.
Dr. Ajay Kumar, good afternoon. Thank you so much for joining in. You know, the question that I wanted to ask you is, in a place like India where the word hospital is generally associated with fear, would this, in general, if at all this is taking place on ground, which you have categorically said no, apart from one-off instances, would that act as a further deterrent and act as a bigger gulf now between the patient and the caregiver?
Yes, absolutely. Because with that we will lose the trust. See, the most important factor for a patient to go into hospital or see the doctor is the trust. If we break the trust, definitely the relationship will change. And the patient will always wonder, if I order a scan, if I order something, is this doctor really ordering it? Is it necessary? So that trust factor is the most important thing. And sometimes because of this news, something like that, when we hear patients are being charged extra, their surge, I think it does help to break the trust. But we should make sure the trust is not broken.
Okay. Just quickly, then, Dr. Kumar, obviously there's been so much talk about CVC and the 60% stake that they have in HCG and the fact that they want to exit. But, the news has died down in the past couple of weeks, couple of months. Is it on the back burner? Where do things stand? Is there
as I said in the past, I would like you to ask CVC. They will be the ones who are exiting. And I can say one thing, I am not exiting. So I am there for HCG and I am there. My issue is excellence, medical quality, I'll continue to pursue that.
Okay, so as of now, you are not aware of what CBC is doing, but I mean, any timeline that you could probably leave us with in terms of maybe what they are thinking in terms of an exit?
I would say in the next 4 to 6 months, you may hear something, but the best person to answer is CBC.
Okay, all right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's the word coming in from HCG that yes, maybe CBC could probably look to exit in the next 4 to 6 months, but obviously the last word remains with them. We'll take a short break. On the other side, Manisha Gupta will be with us to take us through the commodity space.
Welcome back, and joining us on the show now is Mr. D.N. Pathak. He's Executive Director at Soybean Processor Association of India. Mr. Pathak, hi, thank you so much for joining us. First of all, on the SOPA expectations on the crop this time around, against all expectations, we saw sowing numbers on the higher side. Thus, the crop is anticipated on the higher side as well. But first of all, your numbers.
My numbers are for the year for entire country is 125 lakh 81,000. That means roughly 126 lakh tons for the entire country at an average of 1060 kgs per hectare versus last year's 1002 kgs per hectare. So crop has been better, health has been better. The area, we have almost the same area, although the government numbers are much higher than that. But we have seen a lot of shift to corn in Madhya Pradesh, and we also seen some shift in Maharashtra. A lot of area has gone to pulses. Some area has been converted from sugar to soybean. So overall, with the area shift and everything, the area is almost the same as last year as per SOPA's estimate. And the crop is roughly 8% higher at roughly 126 lakh hectare tons.
Mr. Pathak, are you surprised because the soybean prices have been trading below MSP for most part of last few months, and even then we've seen higher sowing numbers come in. Also, what's your sense on the recent price rise? Since the duty hike, we've seen prices for various edible oil prices gain up anywhere between 8 to 10% for the month of October itself.
See, prices have risen mostly on sentiments, and of course, price of edible oils globally have also risen somewhat. So that was the reason you must have seen after the price rise of about 6,000 rupees a ton, the price have again tapered down and they are back to below MSP. And with the number that we have, with the carryover of more than 11 lakh tons and the global queues on soybean crop, I do not see any factors to support a very large rally in the prices or a big price rise.
Mr. Pathak, there have been various conversations on what really needs to be done when it comes to the sector, right from the fact that we are looking at, the dependence of edible oil imports is quite high. 58% of what we consume is imported. And then there is the second point of biodiesel. The third is, of course, about duty. You guys have been talking about dynamic duty for some time. What are the conversations right now in sense of policy?
I think on the policy front, things should happen. They have started happening slowly. I think the duty rise was one thing which we had been requesting for the last 2 years when the prices sharply fell. And now the government has woken up and they have increased the duty by 20%, which is quite a lot. Dynamic duty structure, I think it has to happen someday, because unless the government realizes that everything has to fetch a proper price and the interests of farmers and consumers has to be holistically looked at, not one-sided as has been happening till now. And also, you must keep in mind that edible oil prices, if this is 10 rupees a kilo more, then the average household expense is not more than 100 rupees. It's less than 100 rupees a month. So all this brawah and all this hullabaloo about the prices going up in inflation on edible oil at least is not well placed. I think the government is waking up to this, and there has to be a reasonable price. The government can fix the price. Okay, this is the minimum that should be there. If the price goes below that, obviously you have to increase the duty. If the price goes up for any reasons, you can always increase duty. So I think that is going to happen. I do hope that the government will take action. The major action that should be taken for the long-term health of this industry, obviously, is to increase productivity everywhere. Soybean, we have seen the average hovering around 1,000 to 1,100 kgs, 1,200 kgs. So I think we have to work on that. Sunflower we have lost. We had a 1 million hectare area of sunflower. Now it is less than 1 lakh hectares. And that's a crop which gives you 48% oil, more than 45% oil. So there should be there's a lot of emphasis on getting back sunflower crops to Karnataka, Uttar Pradesh, Punjab, where it can be grown. Overall, I think we have to increase the productivity and also area. There's a lot of possibility of area increase. Let's say in Punjab or in Haryana, where they grow paddy wheat. And I've been saying this quite a long time, that the soil health in Punjab and Haryana is really going bad. And the day is not far when the farmer will keep crying that I can't grow anything. So that has to change. I think paddy wheat is fine, but there has to be a crop rotation. They must grow soybean in Kharif and mustard perhaps, or sunflower in Rabi. That has to happen. That should happen.
Right.
Sure.
All right, Mr. Pathak, thank you so much for sparing time and joining us on the show. With that, it's a wrap on this edition of Halftime Report. From me, Manisha, Ekta, and the team that put the show together, thank you so much for watching. Business Lunch takes the action forward.